Here's our look ahead to next week's key political and financial events. After a quiet first week of 2013, things start to hot up for investors in the next 7 days. The ECB meets Thursday, focus on any discussion of interest rate cuts. Hints of a cut could see the euro fall, especially against higher-yielding currencies like the Aussie. But hopes of a cut have largely been dashed by comments from a bunch of policymakers. Jörg Asmussen said he'd be very reluctant to cut further. Yves Mersch says he doesn't see the logic of even debating more cuts. And Peter Prate thinks there's little scope for movement. John Wraith, global fixed income strategist at Bank of America Merrill Lynch, isn't expecting much either.
We are still, at the moment at least, seeing peripheral spreads come in and the tone remain reasonably calm in the Eurozone. So I don't think that the ECB is going to be doing anything dramatic until and unless we see the improvement in sentiment start to go into reverse. And that is possible later in the quarter, but clearly we haven't seen that yet.
Spain and Italy kick off their 2013 funding programs next week. Spain expected to borrow at least 106 billion euros, but this could easily grow, and investors will be watching for any signs of weak demand. Italy could face higher borrowing costs as uncertainty over the upcoming election could make investors think twice about the risk-reward of holding peripheral debt. NAB's Tom Vosa says the focus right now is on Italy and Spain, but also France.
Spain is a problem. It needs to raise 160 billion euros worth of debt this year. It pre-funded some of this year late last year. Yes, we've seen a fallback in yields. I think that really reflects the market's view that the ECB may step in. So far, the Spanish government haven't allowed them to do so. I think in France there'll be questions over, indeed, the government's fiscal policy, especially in light of the 75% tax debacle. So certainly in southern Europe and in France, we'd expect to see higher yields at the end of this quarter.
Bank of England also meets next week. Data today showing the service sector contracting for the first time in 2 years, likely to give the MPC much to talk about, but don't expect much in the way of policy change just yet.
I think the whole monetary policy strategy will really be put on hold until we get a new governor attending in June of this year. So therefore, any terms of more monetary easing, I think you're looking at July, August, maybe May at the earliest, but certainly a story for the second half of this year, and really dependent on the views of Mr. Carney when he takes over from Governor King.
Stock markets have kicked off the year in a bright fashion, but New Year animal spirits could be tested as companies release fourth quarter trading updates next week. Among those commenting are a host of UK retailers, including Marks & Spencer, Tesco and Sainsbury's.
What's evident is that through the noise, looking through the noise, recovery everywhere remains extremely fragile. And were we to see that, year-end ended softly, then people would start to worry again that any sort of nascent signs of a slight improvement in momentum in any of these economies are once again looking, a little bit elusive.
Finally, the World Economic Forum launches its 2013 Global Risks Report on Tuesday ahead of this year's summit later on in the month. We'll be in Davos, of course, as always, bringing you live interviews with some of the world's most influential corporate and political leaders. That's our look ahead to next week. Have a great weekend. I'm Axel Threlfall. This is Reuters.